Welcome back to my channel. Today we're going to review Evmos. That is the Ethereum virtual machine on Cosmos. For those who are unfamiliar with my channel, what I do is I do research, I feed it into a model, the model has an output, and we check reality to see how accurate the output was, reflect and modify the model to have more accurate outputs. So it's a pretty simple self-feedback loop. This is the model, the project is Evmos, and I'm just going to dive right into it. So what is Evmos? It is a Cosmos-based interoperable Ethereum virtual machine. For those who are unfamiliar what a virtual machine is, Ethereum virtual machine, it's a computer. It's a trust computer that is capable of running like ownership protocol for Web3. So, and if you don't know what Web3 is it's the block, it's just a cryptocurrency space where you can, Web 1, it was read, Web 2 was write, Web 3 is ownership. So you can own the content that you produce on the web. This is a computer that allows for that environment to exist. It's called an L1, and this one is an Ethereum virtual machine version of that. It's developed by Tharsis Labs. The name is Ethereum Virtual Machine on Cosmos. That's where the Evmos comes from. And it's, it allows for Ethereum apps on Cosmos. And that's the gist of it. It's just another Ethereum, but it runs in the tendermint consensus algorithm. And it runs, it's interoperable. It has the cross-chain communication protocols built in, software development kits in the Cosmos plus Ethereum virtual machine ecosystem. So let's get into the price action and what the model expects for that. Right now, expects not a big expectation for increase in demand for the token. No price FOMO for now. Expectation from the model. Money needed to move up, price to decrease does not appear to be so. And tokens on the sell side to decrease does not appear to be so. So these are in the negative direction type things. As far as social media awareness, you aren't super early with this, but it is, it's one of the earlier ones. Like, not a lot of people are aware of this project. It's not super popular, but it's not something that's some hidden gem or is completely unknown. As far as the roadmap, they said no roadmap yet on the Telegram. They said it's not ready yet. This project has only been trading for 3 months, so that's one thing to consider, and I couldn't find any other details on the roadmap. So, regarding token issuance, the inflation is going to be quite high. That's why a lot of these things are red on this model, because I believe that it needs time to mature in order for it to have competitiveness against the average crypto. It has a very high inflation rate, 500% for the first 4 years. Let's put it this way. In July 22, it had 280. In March, it will have 500. That's 100% inflation in 7 months. And March 23 is when 50% of the tokens are out. That's usually the best time to get out to start investing in a project, is when it's at least 50% issuance, especially when it really matters if the token distribution is important. That's just something I've observed, because mathematically it works out that way too. Because it can only double after 50%. Like, if only 25% of the tokens are released, then it could, the token inflation, it could be 300%, to feed the other 50, 75, and 100%. Whereas if it's 50%, the most it can do is double. And then, if it's 75%, then the most inflation can be is 50% if there's a token cap. That's why, roughly getting in around 50% token issuance is a pretty good time to get in. So March of next year would be a time to look at this again from that issuance standpoint. As far as in the long run, the token model is good. It should correlate to a PDE eventually after these issuance concerns are over, because they have contract deployment fees that go to whoever deploys contracts, which means that a lot of people will want to build on an ecosystem. So, because that's a good design, in my opinion, to have that component, but also validators earn fees, so their ownership of the blockchain. They're also governance. So let me actually get into the token model exactly. So the token is used for vote, access to the network, and work. It is a DAO vote. Fees to the network go to the node operators and the infrastructure. There's also incentive. Obviously, when a project's this early stage, they need to have incentives to get people to use the ecosystem. And they have shared revenue for the developments. So, like, if you develop a contract, some of the fees that are used will go to the contract developer, contract address. So that is good because that is an incentive to build to build on this platform. So they're subsidizing through that through the fees for the contract writers, so the developers get paid. That's a pretty good model in my opinion, and that I would like to see that in more ecosystems. The staking validators, obviously, this is the tokens used for security and validation, and whatever happens on the network will be rewarded to those validators if if it gets a lot of traffic. So in essence, the validator's ownership of the network, and to run a validator, you need to have tokens to run them. And okay, so the target market, how big is the market for an Ethereum virtual machine L1? Well, as I've stated in many of my other videos, I think that we're talking about the whole world's going to move on to crypto. It's a $400 trillion opportunity. Very few people are aware of it. Crypto is about $1 trillion in total, the whole thing. So that's a 400x in a general sense for all of crypto, because crypto will run the world's assets. And I believe that this will make the world a more efficient place. It'll bring us into the Internet of Things. It'll bring us into the future, because it is allowing for automation of value transfer and automation of business logic. And this is one of those computers that allows for that. They do have a lot of competition, but the market is very large. So I put that the market opportunity is large. Especially in blockchain, there is a lot of L1s competing for that same general sense value transfer network infrastructure. All right, as far as the market cap for this project at the timing of this video, it's 371 million, fully diluted, 1.8 billion. Price is $1.85. I consider this a high cap, especially for something that's so new and something that doesn't have a lot of total value locked yet. So it's a high market cap, which is risky. The I couldn't find it. There's no ICO. They said there's no lock or no token sales for pre-mined tokens in their documents, but there was issuance to tokens through, what is it called, airdrops. So that's a good way to get network started. But it's only been trading for 3 months, so I said the price action is not something to really consider. It's too early for that. So that is a risk component. As far as the governance for this thing, governance is generally good. I'm just going to circle all of this so I don't have to get into details of it, but the governance factors were generally good. Basically, the validators run the infrastructure, and you have to own tokens in order to run validators. So it's like shares of the company. And this also means that those who run the network are going to be technically competent, because the validators are the ones that make decisions, and also community vote through token weight. So the governance has a lot of good mechanisms to ensure that those who are ownership of the network are the ones running it. So that its governance model is generally good from that standpoint. Regarding its competition elements, it's not early or anything. I'm actually going to make this yellow. It's not early or anything, and it doesn't have a moat, because Ethereum virtual machines are there's a million of them now. So there's no protection from businesses putting their logic on many different Ethereum virtual machines, so they don't really have a moat. And they're not first movers by any stretch. And they're also not the best of the competition, because there's many different Ethereum virtual machines at this point. Regarding developer experience, developers should have an easy time developing. They also can get paid pretty well. I like the contract logic that's built into this that rewards developers for onboarding, so that potentially will bring developers to write software for this computer. Because if you launch your smart contracts, you get part of the fees that run across that smart contract because of their logic that does that. So that is good, as well as whatever the DAO treasury decides to fund. So I do expect high value upgrades. I expect value of services to increase. I expect user experience to be good, and these are things that can lead to network effect, which can lead to no tokens per person decrease. What made all this red was the beginning stages of this. The issuance looks to be very heavy, so that's why it has those red components. After some time, maybe this will be something that you can visit, and this will be green on this model. All right, and then large business models demand token. I don't see any super well-designed mechanisms to make specifically business logic want to run this, other than to the typical yield from validators or voting. So, and there's that. And the team is not like a team of all-stars or anything, but they've been in the blockchain space for a while. A lot of them have development experience, so they're just a generally good development team. But it's not like all-stars. Like people who have run multi-billion-dollar businesses before, etc. So that's just a team from that standpoint. Okay, and finally, Liquidity depth is decent. It's got 81K to move the price 2%. It is, I would say it's a little too early to say we're seeing exponential growth for this. It's only got 10 million total value locked. That's kind of small for something with this market cap. I know some of its competitors, such as Moonbeam, which is another Ethereum virtual machine, has over 21 times as much total value locked, yet it has a smaller market cap than this. So that means, in my opinion, the market is missing something here. But it is a live niche. It's live now. So, okay, so finally, let's see here. Let's go, okay, so the final summary. Low market cap with accomplished CEO, I put no. Early social media, it's kind of in between on social media. And live niche, I put yes. The final summary, pros, it is a Ethereum virtual machine, which is a large market, but they do have a lot of competition with that. Token economics and contract deployment allows for developers to have an incentive to launch contracts on it because the contracts pay the developers. That is good. Airdrop, community issuance, which means that there's no VCs. This could be a community-run project that is potentially good as well, and that means it is distributed in that sense as well. The cons: it's low total value locked to cap compared to the competition. A lot of their competitors have a better ratio between total value locked, but that could grow quite rapidly. It's only at 10 million, so it could 10x easily if they get some traction. Lots of competition is a major con, and there's massive release of tokens, and it's a high cap to low trade time. So this does have a decent sized cap, and it's only been trading for 3 months, so there's risk of dumpage. Even though I like how they distributed tokens to the community, etc. Okay, so if you like unbiased evaluations of projects that will run through this model to correlate to higher ROI, please like and subscribe. This content aims to simply be as unbiased as possible. Next piece of information I'm going over is for patrons exclusive, where I write down my patron exclusive thoughts from my experience in the space, where I've successfully got 200% APY over the last 7 years, getting wealthy simply from starting from like $5,000 initial investment to being financially independent. I put all that logic into my patron group. If you're interested, check that out. Otherwise, this is the public content. And once again, if you like unbiased information, please like and subscribe, and I'll see you guys in the future.